9 years, thousands of hours in the market, plenty of wins, plenty of losses, and plenty of rebuilds. So ladies and gentlemen, I have condensed 5 powerful lessons that I have learned during this period that will literally save you years of pain. Now, this isn't just theory, this is from real, raw experience. I have been through, in the trading journey, you say hell and back, and we're here today. In this video, even if you are a scalper, you're a swing trader, the lessons that you learn here will be extremely beneficial to you. So stay tuned, because these are lessons that no one really talk about in the trading game. So diving straight into it, the very first lesson that I wish that I learned when I came into the trading game, or even before I came into the trading game, was there is no such thing as an overnight success, because it probably would have saved me thousands of dollars and stopped me from setting I am a multi-millionaire every single, year, and trying to achieve that on a monthly basis in trading when I didn't have the skills yet. So when you come into the game, it's really critical to understand that there is no overnight success. There are going to be periods where you feel like you are not making any progress at all, right? It is completely and absolutely normal. Think about the concept of picking up a guitar today, learning a little bit and thinking that you're going to be playing at a Madison Square Garden or, a stadium filled with a crowd, filled with people a month or 2 months or 3 months from now. Well, that's a perspective that a lot of traders have when they come into the market. In your first 2 months, there's so much expectation for them to be like making money, have a profitable system, have your psychology in control. When you think of all of these concepts, you understand that, hey, you know what? It may take you a little bit of time. And that's what the journey is, right? It's a journey where you will have to develop yourself psychologically. There's going to be a journey of personal development as well, where you're just growing as a person, becoming more stoic, learning how to handle your losses, learning how to handle your wins. But it's really important to understand that there's not going to be any overnight success. Stay away from the social media, fast freedom, fast lifestyle that constantly being, put in your face. You will succeed at some point in time, but I wish that someone told me that there was not going to be, any overnight success. Now, lesson number 2 is let the market make the first move. This one really took a long time to hit home, because I came into the game believing that as a trader, you should be able to predict the market. That is your job. That is why we watch all these YouTube videos. That's why you're on my channel, right? Learning how to read price action. And as a byproduct, I thought that, my job was to make predictions. But that's actually not your job. It's not mine either. Our job as traders is to anticipate, right, based on the story that we get from the price action and the technical aspects of the market. Going over to the chart shortly, I'm going to show you what that looks like. I used to get into a lot of trades prematurely because I thought that I would miss out on the opportunity if I didn't get in quickly before price made its move. And what I realized is that's the wrong mindset to come into the market with, because it is a mindset that is driven, with fear of missing out. It is going to create a lot of anxiety and a lot of anxiousness and a lot of bad trades, honestly. You're going to be taking trades that you shouldn't be taking. So what I realized is letting the market make the first move will allow me to trade less and kind of follow this role of one shot, one kill that I like. So even if you have multiple strikes to execute on a daily basis, it's always better to try to get it, within, one shot. And that means you have to wait for where price is actually truly looking to go, and it will guide you. Taking a look at this example here, this is one way of letting the market make the first move. Come into the market when there is an influx of liquidity, usually the start of a main session like the New York session, 8:30, 9:30, 7, 7:30. These are all times where you can expect volume in the market. Here, boom, you see price move in one particular direction. This is about 9:30. So the stock market's essentially open. This is NAS. You can start to expect a lot of volume, especially at this particular time. So whether you were looking to be a buyer, okay, cool, and you see sellers come into the market, right here we have price taking out this low. What do we see next? We see an influx of liquidity in the opposite direction. And this will show up in multiple different ways, where price, when the market is making the first move, it will move aggressively in one direction and then reverse in the opposite direction. So if you want to be a buyer, wait for sellers to dominate and then buyers to come back in. Because right here, sellers could have dominated, could have continued to move lower. Why didn't it happen? Because it's a buyer's market and buyers actually truly want to dominate. So, waiting and getting that confirmation. And on top of that, we have gotten a 90% retracement to 95% retracement of this move. So it's a clear sign that price is likely going to be making a move to the upside. And on top of that, this right here could be considered a fair value gap. And you just put your stop loss just, right there. And you can target the highs right there and see what the market decides to do, right? So right here, boom, market's making its move. And before you know it, you have a winning trade by not guessing, but letting price show you its true intentions. Another quick example here is you can see that in a range-bound market, which is more common. And it's really more important here to let the market make the first move, because it doesn't do you any good trying to be a buyer just because the market is moving up because we're in a range, or trying to be a seller because price could ultimately break up. So you don't know, right? It's always better let the market make the first move. What do we see? Okay, boom, right? Should we be a seller? We don't exactly know yet. We don't exactly care. We're going to let price do its thing and actually break out, right? Beautiful. The market is broken out here. All we're simply waiting for is a retest back into the zone. And once we get that retest, right, we can execute our trade. We haven't exactly gotten it yet. So boom, we've seen that retest. You can now look to say, okay, you know what? This may be worth potentially going in on a short. So you execute that and boom, right? You can keep your stop loss right there and try to find an area of liquidity to target, price to reach for. These are some areas right here that you can potentially reach for and see if the market is willing to hit any of your objectives. So right here, price ultimately hits one of our targets. Boom, you made some money. Both targets, you've essentially, made some profits for the day before price essentially comes all the way back up. So letting the market make the first move is critical. So going over to lesson number 3 now, this is more of, I believe, a law. It is that powerful. If you want to be a successful and profitable trader as quickly as possible, this cannot be ignored. And that is consistency in your process will create consistency in your results. Because when you come into the market as a trader, a lot of us spend so much time focusing on trading strategy. I spent like years trying to find the perfect strategy. Spent thousands of dollars buying courses trying to find the perfect strategy, only to get to 9 years of trading and realize that trading strategy is really not the most important thing in your overall trading journey. It is like, I always use the reference of a mafia, like family. You have the godfather, you have the close advisors, right? And then you have the foot soldiers, the guys who are just coming in, who are going to execute the little jobs. That is how baseline your strategy actually is. It's like the foot soldier. When you come into the market, there is a whole array of things that you're going to be doing before you execute, like how you show up, how you break down the market from the daily time frame, the weekly time frame onwards, right? What confluences you're going to be using. These are going to be the process that you engage in. Even how you wake up and your overall mental frame. The more consistency you can maintain in your process, right, in your trading process, in your psychology process, the more consistent your outcome will be. And that's what I started to focus on, that really took things to the next level for me. One thing that you need to understand is, if you show up on Monday, you trade with a fib, right, or you trade with a market structure break. Tuesday you come in, you trade with an indicator, right, or a strategy you just learned from watching, someone else, or that course you just bought, right? And then you show up on Wednesday and you decide to switch back to your indicator or a strategy that you were using years ago because maybe the other one didn't work. That is inconsistency in your process. The market doesn't have a chance to actually reward you for nothing, because you've done nothing. You've done a bunch of nonsense. So you need to focus, right, on one particular strategy, collect samples, right, backtest that strategy 100 times, 200 times, right, see how it plays out, and focus on that for like 30 days. Don't do anything else. When I started to do that, it made me realize I had more confidence executing the same strategy over and over again. I learned the market conditions that where that strategy was conducive in, and the market conditions that it wasn't. Really understanding that if you want consistency, right? If you are a struggling trader, right, you haven't achieved consistency yet, right? Start doing the same thing over and over again, and just track that. Maybe even if you're losing for a little bit. Right, but just track it, just track it, just track it. But make sure you keep the process the same. That's the biggest thing that really transformed and took me from a trader who was struggling. And when I hit that period, I knew something had changed because I was no longer anxious when I came to the market, because I was so anxious because I didn't know how I was going to engage the market today. It was like, oh my God, shit, anything can happen. Right? Anything can happen. I might just lose my whole account today because I don't really know. Right? I was super reactive. But when I came up with a consistent process, then, I became a lot more calm. I became a lot more happy. I became a lot more focused and also a lot more consistent. As you go on in your trading journey and you're acquiring more knowledge, you're acquiring more skills, there's going to be a lot of things that you're learning. It's not a matter of what you learn. It's being able to use what you learn effectively and placing them. And one lesson that I learned that I want to share with you guys today is that support and resistance is not a strategy. It is a confluence. And this is not just about support and resistance, right? We can talk a little bit more about it, but support and resistance is a tool that you use to make a lot of your decision making. When I first came into the trading game, the education space, support and resistance, it was support and resistance was like everything, supply and demand, right? The same thing, supply and demand, support and resistance. These were things that were thrown around. So you focus so much on them, understanding that they are a small piece of the puzzle. They are not the entire puzzle. So as you come into the trading game and you start to acquire more knowledge, it's important to know what are strategies. A strategy is a component, right? Is a full piece of the puzzle there. It requires multiple components, not just one. And understanding the difference between a confluence, right? Confluence is like an advisor, things that are going to allow you to make decisions more effectively. And as a king, as a queen, which you are, you're going to need multiple advisors. So when you're coming into the game of trading, understand that support and resistance is not a strategy, it is a confluence. So by itself, it is limited. So if you're spending so much time focusing on trying to trade support and resistance, it is not going to work, right? As a strategy. Let's take a look at the chart so I can show you a little bit more about what I mean by that. Support and resistance are everywhere, right? You see it on the chart all the time. Take a look right here. This is a support level. But if it is the only tool that you are using, right, for your strategy, you are essentially gambling. Support and resistance is a great confluence. And unfortunately, you learn a lot of support and resistance strategy, especially when you're just first starting out. And I spent years just learning support, resistance, price hits this level, I buy. But the problem with that is it is not a strategy because it needs to be incorporated with other components like market structure. Because let's say, for instance, you bought right here thinking that price was at a support level and that's all you factored in, right? You probably would have been in the trade that went nowhere, or maybe you got stopped out as the market came down all the way here. But if you wait for the market to react at a level, right, you wait for market structure break, which this would be considered, and you also wait for your session open, right, where there's an influx of liquidity coming into the market. Right here, this is about London session, right? So 3:30, you're seeing price make high highs and high lows, right? This is a good confirmation to have because you know that there's likely going to be liquidity. We already have a clean break of structure right here. You can look to get involved in the trade. But if you are simply using support and resistance, drawing your support line, and when price hits your support line, You just get involved in a buy trade. Let's say you map this level as your support level, right? And then the market hits your support level. You look to get involved, maybe even right here, right? Price hits the support level and you look to buy, you're going to lose. You have to factor in market structure. You have to factor in momentum. You have to also try to incorporate support and resistance with other components like order blocks, like fair value gap, and try to wait for price to actually trade out of that level with momentum before you actually get involved in it. That is going to be one of the best things that you can do when you are using and trading support and resistance, but it is not a strategy. Your strategy right now is price hits a key support level and you just get involved without considering market structure break, without even maybe considering a fair value gap, order block, any other components to it. And that's just it. You are gambling, right? So make sure that you focus on using support and resistance correctly. Now, going over to one of the most important aspects of your overall trading, and that is your psychology. And one critical lesson that I learned is that your psychology must be integrated into your system, right? Your strategy, whatever it is, your process. It needs to be, psychology cannot be separate. And that's the one thing you hear a lot. And it kind of creates this feeling of like, oh my God, I don't know what to do with my psychology because I spend so much time acquiring knowledge and I don't even know how to deal with psychology. Everybody talks about be patient, be disciplined. That's what they talk about. But one of the most important lessons that I learned was I needed to incorporate my psychology, right? My emotions into my overall system, because ego, fear, every blown accounts that I've ever had, it didn't come from my strategy. It came from my emotions. It came from my psychological process. You focusing on being disciplined is not going to work. You focus on being patient is not going to work if that is not incorporated into your overall system. In my trading process, right, you hear me talk about the 3-step process: analyze, anticipate, and execute. Analyze is the breakdown of the charts, being able to read the higher time frame, scale them down to the lower time frame where I'm going to be executing. But before I get to that execution, I wait, which is the anticipation process. It is the mindset of a lion who walks into a field filled with gazelle, and rather than running head first and just seeing what he catches, he waits, right? Sits down or maybe hides in the shade, tries to scope the entire scene and try to find that lame or that, gazelle that is just that easy target, easy prey, right? And that needs to be something that you need to approach the market with that sort of mindset, and your strategy needs to also allow you to do that. Your strategy needs to have, a part where, if you're someone who deals with over trading, over leveraging, right? If you're over trader, you say, okay, I'm going to come into the market. I'm only going to give myself 2 trades. After that, boom, I walk away. If you're someone who likes to over leverage, right, you keep your lot size the same. Afterwards, after you're done trading, whether you win or you lose, you walk away, you lock it, right? From a strategy standpoint, like I said, you continue to do the same thing over and over again. You wait for your setup. You only take high quality setup. And if those high quality setups are not there, you just walk away because you've mastered that setup, right? You've spent time analyzing, taking screenshots of the specific setup that you're looking for. So when you come into the market, it's easy to be patient rather than patient being this like, okay, like what am I looking for? Because if you don't know what you're looking for, you're not going to be patient, right? You're just going to jump into any trade that comes your way. So being patient from a psychological standpoint requires understanding, requires clarity, and you need to have clarity in what you're looking for. So your psychology and your technical needs to merge, needs to come together, right? Because that is going to allow you to then be the super trader that you want to be, where it's like, okay, if you are dealing with psychological problems, it's going to be in the heat of the moment where you have a trade, you've taken your setup, right? And now you just have to regulate yourself and manage your emotions, focus on your breathing, lower your heart rate, keep your amygdala from taking and hijacking your brain and hijacking your performance, taking you into fight or flight. These are the things that you do, right? These are the psychological things, but everything else, from patience, from discipline, knowing how to just wait for yourself, it requires you to incorporate your psychology into your overall strategy. Ladies and gentlemen, these are some of the lessons that I wish that someone had told me, someone had given me just a little bit of like a helping hand and said, hey, you know what, this is it. But of course, everybody's on their own journey, and sometimes, it takes you, 1 year, 2 years to learn something that it may take someone, 9 years to learn. But I'm happy with how long it took, because, I'm happy where I am in terms of my trading journey, and just the level of consistency and the level of profitability we've been able to build over the years. But if I am to give you these advice, these are some of the things that I would say to start implementing right now in your trading. Even if you take one of them, right, and you start to implement it into your trading, you're going to see a world of a difference. It's going to have a positive impact in your life and in your trading, your life, because it can save you years of pain, years of struggle, years of losses, like, what happened to me. So, ladies and gentlemen, that's the video. Let me know which of these lessons struck the most for you, right? You will be applying in your overall trading today. There are still plenty of lessons, of course, that I could share with you, but these are some of the most important ones that I said today I want to share with you guys, and just give you that little bit of juice to keep going in your trading journey. It's Emmanuel from LiveFree Effects. If you enjoyed this video, be sure to hit that like and subscribe and turn your notification on so you don't miss any of your future videos. Thank you. I hope you're out there living free. God bless.